Hi guys, hope you're all doing well. So this is the second video of the three-part tutorial on the indicator that I'm going to do. So I'm actually going to break this two-part video into four little segments of the four trades that I'm going to be showing you. And this part is going to be demonstrating how to use order blocks of inefficiencies, and breaker blocks. I'm going to make a third part to show you the Boyan side of things separately, but I just was doing some backtesting this morning using the indicator, and I've actually got some good examples of trades to show you guys, and especially showing you guys from a context point of view as well, because there's a trade in here that provided a good opportunity, but because of the context that we were in, it wasn't the right sort of trade to take, and I'm essentially going to go through all four of you. So just to build some context here, we came off all-time highs and broke our 4-hour market structure bearish, and we are currently in a mid-time frame discount zone of our 4-hour market structure. So we are currently in Friday morning. I've put the replay onto where I'm sort of awake, looking for trades, looking for setups. So I know that in this range here, we actually have multiple swing fails of our 30-minute market structure. So we start here, we swing fail here, but in doing so, we do break our M1 market structure to bullish, but the market does make its way back down to the lows, and as you can see, we do swing fill our 30-minute market structure again. So as you know, from a range point of view, once we've SFP'd our market structure multiple times, we're obviously going to make our way up to the highs. So once we get this SFP of 30-minute and what would be our new M1 market structure, as we've gone from high to low, and SFP'd it, I'm now looking for any indications of signs of strength to attack these highs. So as we've got our first valid market structure leg on the 1 minute, I'm now going to, of course, use micro timeframes to analyse any moves that provide an opportunity. So using our 45-second market structure here, if I just play, and essentially what I want to see is, like now, I want to see two bearish candles form, so I know that we're in a market structure leg, and look for an opportunity to essentially get on board for a trade. And the reason why I'm looking for a trade here is to fulfill our order flow objective. So just to explain what order flow objective is briefly, when you're trending up in the market, all these pullbacks that you see will be known as your order flow objective, because once you get a breaker structure, and by this I mean a clean breaker structure, not an SFP, so you get candle that closes above it and you start slowly retracing your way back down, this is what your order flow objective is. So this will be a demand zone with an inefficiency that the market is balancing before continuing on up, and these provide trading opportunities, especially if they fall within your retrace fibs. So that's essentially what we're looking for here, and this is one of my systems that I trade within the right context. So back to the data, if we just fast forward it a little, so you can see here that we're trending up on our 45-minute structure, and we have swing filled this to an extent. This isn't a clean break. You know, if I want a clean break, I want to see this candle finish somewhere up here. This isn't a good break. This is a break to an extent, but it's a break that's going to lead us back down, and test some balances, because yes, it's a breaker structure, but it's not a clean break, so I'm expecting quite a deep pullback here. This is just something that I've noticed in testing, when you get your breaks. So this is where I'm now interested in pulling up my fibs like so. And I tend to focus on the golden pockets mostly here. So these are the ones which will provide the best opportunities, especially these three here. So what I will proceed to do is turn on my indicator and I'll show you the settings that I'm using. So I like to use order blocks of inefficiencies. These are the ones that are going to provide the least noise, because for instance, if I was to show you the order blocks, you're going to get a lot of data appear and it's going to become a little bit unproductive and it's going to provide a lot of confusion. So if I just skip forward a little bit, there you go. You've got 12 order blocks in one area and it's not what we want to be seeing, because you're just like, what one do I take? So I prefer to use order blocks of inefficiency. They're a lot less noisy. It's only going to provide one or two, and within the right context, it's going to allow you to pick the right one to take. So proceeding with the data, there we are. So you can see we have a 6-minute order block here with an inefficiency, and the midpoint is bang on 667. So I will just bring in the midpoint here with a white line, just so it's nice and clear. I'm not too precarious about getting straight on the line. I will take it within 10% of the midpoint. So if it falls here, it's a valid trade to take. If it's here, it's still valid to take. So I will put on my long position. My stop loss will just be slightly below the order block, and my target will be for continuation. We just move this over a little bit, so it's going to capture the data. And as you can see, we work our way down into the order block, and we do, in fact, fulfill our position. If I just turn that off so it's nice and clean, and then we do make our way back up to the technical target of the high. So this is a perfect example of how you can use order blocks of inefficiencies from the indicator to capture an order flow objective trade. So as I said, I'm going to make 4 mini videos within this second part. So we'll go on to the next trade in the next part.